People ask all the time, how do insurance companies stay in business for decades, sometimes over 100 years? The answer isn't luck. It's systems, safeguards, and oversight. Let me break it down for you. At the core of every insurance company are actuaries. They're the brain trust. They calculate life expectancy, risk, payouts decades in advance. So they're not guessing. So before a policy is ever approved or priced, actuaries already know what should happen over time, and they price it accordingly. They're actually some of the highest paid mathematicians. Second, insurance companies have, wait for it, insurance. It's called reinsurance. So if there's a catastrophe like a pandemic, a natural disaster, mass claims, reinsurance companies step in to absorb part of the loss. And third, insurance companies are legally required to keep reserves. Reserves are basically a large pool of capital set aside specifically to pay out future claims. And they're legally required to keep billions set aside just for that. So if reserves fall too low, regulators step in fast. And finally, insurance is one of the most heavily regulated industries in this country. If an insurance company ever fails, there are state guarantee associations that step in to protect policyholders, similar to how the FDIC protects bank deposits, but it's just structured a little differently. So insurance companies stay in the business long-term because of the actuaries making the math work, reinsurance spreading catastrophic risk, legally required reserves, and most importantly, strict regulations and consumer guarantees. And when you understand the system, you realize simply how powerful it really is. The same structure that protects insurance companies also protects properly structured policies. If you want to learn how to use insurance correctly, follow along. I got you.